Welcome to this presentation by Facilitators Research. This research is distributed exclusively for informational and educational purposes and does not constitute financial, legal, tax, or investment advice. For such services, you may reach out to speak to one of our officers.
Financial exchanges and data is a small but strategically vital subsegment of African financial services. Exchanges are the infrastructure on which capital markets operate, providing price discovery, liquidity, and clearing. The data generated by exchanges is itself an increasingly valuable product, sold to investors, regulators, and academics. This presentation examines the African financial exchanges landscape, focusing on the multi-billion-dollar institutions that anchor it and the structural forces that will determine their trajectory over the coming decade. The Johannesburg Stock Exchange, the Egyptian Exchange, the Nigerian Exchange Group, and the Casablanca Stock Exchange are the four pillars of this subsegment. 8 exchanges anchor African capital markets infrastructure. The Johannesburg Stock Exchange dominates with $1.2 trillion in equity market capitalization and more than 350 listed companies. The Egyptian Exchange follows with $60 billion in market cap and over 220 listings. The Nigerian Exchange Group holds $45 billion in market cap across approximately 155 listings. The Casablanca Stock Exchange has $60 billion in market cap from just 75 listings, reflecting its concentration in large-cap financial and telecom names. The Nairobi Securities Exchange, BRVM, covering Francophone West Africa, and the Ghana and Botswana exchanges round out the major venues. The Johannesburg Stock Exchange, founded in 1887, is Africa's flagship exchange and one of the top 20 exchanges globally by market capitalization. With more than $1.2 trillion in equity market cap and a sophisticated derivatives market spanning equity, currency, commodity, and interest rate products, the JSE is the only African exchange that competes head-to-head with developed market venues. The JSE is itself a listed company, traded on its own main board, with a market capitalization of approximately $1 billion. Its strategy focuses on derivatives growth, ESG product development, and post-trade services. The JSE's largest listed companies include BHP, Prosus, Naspers, Standard Bank, and FirstRand, reflecting South Africa's mining, technology, and financial services heritage. The Egyptian Exchange, established in 1883 in Alexandria and 1903 in Cairo, is the oldest exchange in the Middle East and North Africa region. With more than 220 listed companies and a market capitalization of approximately $60 billion, the EGX serves a country of more than 100 million people. The exchange has been a particular beneficiary of the Egyptian government's privatization program, with state-owned offerings in banking, energy, and real estate driving listing activity. Commercial International Bank, Talat Mustafa Group, and eFinance Group anchor the EGX's market capitalization. Recent reforms have streamlined listing requirements and attracted renewed foreign investor interest. The Nigerian Exchange Group, formerly the Nigerian Stock Exchange, was demutualized and restructured as a listed holding company in 2021. The NGX Group operates the Nigerian Exchange Limited, the NGX Regulation Limited, and NGX Real Estate. With approximately 155 listed companies and a market capitalization of $45 billion, the NGX is the largest exchange in West Africa. Its largest listings include Airtel Africa, MTN Nigeria, Dangote Cement, BUA Cement, and the major Nigerian banks. The exchange has been working to attract new technology and consumer goods listings, while developing a commodities trading platform to deepen agricultural finance. African exchanges generate revenue from 5 primary streams. Listing fees are annual and initial fees paid by companies joining the exchange, scaled by market capitalization. Transaction fees are per trade fees on cash equities, bonds, and derivatives transactions, the largest revenue line for most exchanges. Market data sales are real-time and historical data subscriptions sold to investors, data vendors, and media organizations, a high-margin revenue stream. Clearing and settlement covers post-trade services including clearing, settlement, and custody, often operated through a separate central securities depository. Regulatory fees cover ongoing supervision and compliance monitoring of listed companies and trading members. Exchange and data provider businesses operate on different dynamics. Exchanges operate natural monopoly infrastructure. Once a critical mass of listings and trading members is achieved, the network effect makes displacement very difficult. Margins are high, with operating margins typically above 40%. Growth depends on new listings, trading volumes, and product innovation. The JSE, NGX, and EGX all fit this model. Data providers aggregate, clean, and distribute market data to professional users. Examples include Bloomberg Africa, Reuters Africa, and local providers. Margins depend on data quality, exclusivity, and analytics. The data business is growing faster than the exchange business itself, particularly as retail investor interest expands the addressable market. 2 African exchanges are themselves listed and provide direct investment exposure. JSE Limited, listed on its own main board, has a market capitalization of approximately $1 billion United States dollars. The Nigerian Exchange Group, also self-listed, has a market capitalization of approximately $250 million. Across the major African exchanges, average return on equity was approximately 15% in 2023, with operating margins typically above 40%. This makes exchanges among the most profitable subsegments of African financial services, reflecting their natural monopoly characteristics and the structural growth of capital markets activity. 5 strategic imperatives apply across African exchanges. First, attract new listings. Exchanges must actively pursue technology, consumer goods, and financial technology listings to deepen their equity markets. Second, develop derivatives markets. Most African exchanges have underdeveloped derivatives markets, leaving significant growth runway for futures, options, and swaps. Third, build ESG product sets. Green bond listing frameworks and ESG indices will attract sustainable finance flows and differentiate progressive exchanges. Fourth, pursue cross-listing agreements among African exchanges to create Pan-African liquidity pools for large cap listings. Fifth, invest in data monetization. Exchanges that build sophisticated data and analytics businesses will unlock a high-margin revenue stream that compounds with trading volume growth. In summary, African exchange trading volumes will grow at low double-digit rates as pension funds deepen and retail investor participation expands. Derivatives market development will be the single largest growth opportunity for most African exchanges over the next 5 years. Cross-listing and cross-trading agreements will create the foundations for Pan-African liquidity pools, and data monetization will become a defining competitive differentiator, with high-margin data businesses compounding alongside trading volume growth. The financial exchanges and data subsegment will remain one of the most attractive structural growth stories in African financial services. Thank you for watching this examination of financial exchanges and data.